the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome back to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U. Today's guest is Mr. Jeff Neumeister, Managing Partner at Kelly+Partners Advisory Services, where he leads a team of specialists in forensic accounting, financial advisory, and litigation support services. With over 22 years, Jeff has worked across industries, including construction, healthcare, entertainment, as well as real estate, helping organizations uncover fraud, strengthen operations, and resolve complex financial disputes. Beyond his expertise as a forensic accountant, Jeff is also a respected educator and consultant, providing expert testimony and strategic insights in numerous high-profile cases. And we'll dive into that. His work helps clients see beyond the numbers and create proactive financial strategies that drive long-term success. Jeff, welcome to the show. It's great to have you here.
Thank you, David.
All right, let's get started. What inspired you to pursue forensic accounting first? And then how did that lead to your current role as the managing partner at Kelly+Partners in Burbank, California?
Yeah, so I actually didn't know anything about forensic accounting during my first undergraduate program. Any of the accounting courses I took, it was never brought up. Now this is, a little while back, and it didn't have the same prevalence that it does today. Fast forward, my first, professional job, if you will, post undergrad, was at a firm that did nothing but forensic accounting work. Again, I had no idea what it was. And pretty quickly over time, I came to appreciate that it's kind of the investigative side of accounting. Instead of, a lot of people think of when they hear forensic, they think CSI and shows like that.
Sure.
Difference being, instead of bodies and blood, it's documents and numbers, right? But conceptually similar processes.
Okay. So fantastic. Thank you for that. You work with businesses of all sizes, from small startups to large corporations. What are some of the most common financial issues, or for that matter, some frauds that you have encountered in your profession?
Sure. Yeah. Most of the frauds, they're pretty blatant. And the reason why they perpetuate so frequently beyond the Bernie Madoffs and other schemes people read about is just a lack of fundamental understanding of books and records, or lack of books and records altogether. I'd say probably half of the cases I worked on in my entire career, either directly or through some affiliation, could have 100% been avoided if there were books and records and somebody bothered to look at things for a few minutes a month. Right?
Okay.
It happens quite often. For example, I had a case down kind of the San Diego, Orange County area. Individual was a bookkeeper for, I think, about 20 different clients, right? And she would take payments from them for their tax payments. Right? It's like, hey, Mr. Smith client, you need to make an estimated payment to the IRS. So tell you what, write a check to the Internal Revenue Service for $10,000. Just make up numbers, and drop it by to my office, and I'll take care of it for you. Flag: you don't write checks to Internal Revenue Service. You write them to U.S. Treasury. Right?
Sure.
She take checks and deposit them into her own business account.
Okay.
Another FYI: just because you write a check to a particular payee does not necessarily mean somebody can't deposit that into a completely different payee account. Banks don't necessarily you can't rely on them on fact checking every single thing on every single check. There's automations in place for that to a degree, but you still need to look at what's happening. So anyway, she would deposit all these check payments from various clients month after month, year after year, into her personal bank account or business bank account. And then when a client would get a tax notice saying like, hey, they say that I owe $40,000. I thought I was making payments. Oh, no, no worries. I'll handle it for you. And then she would turn around and collect other payments from other clients and then make a payment to this old tax bill for one of the older clients. So essentially it's a Ponzi scheme, right? She was just lapping payments from clients to cover old tax payments. And the particular case we were working on, one of the victims lost almost $400,000 to her over the course of maybe 8 to 10 years she is working with him. And that was only one of about 20 clients that she had.
Wow. So what role does something like this forensic accounting play in business valuation, as well as fraud and litigation? And how can companies benefit from the services before they find themselves in a legal dispute?
Yeah. Most of the time, a forensic accountant is brought in after the fact, right? Like there's been a lawsuit, there's been known embezzlement or something else. And now it's just a matter of figuring out what happened and how bad is the damage. In 2017, I started my own firm, Neumeister and Associates. Again, I was almost exclusively in forensic accounting and expert witnessing up to that point. And when I opened up my own shop, I decided to be full service, right? One, because anytime someone hears the acronym CPA, they're like, oh, let me ask you a tax question. Doesn't matter if you do taxes or not. And two, I realized my experience from the forensic accounting world gave me a very unique insight into all things accounting related, right? And I realized pretty quickly how often vanilla tax services or bookkeeping services could immediately benefit of having a little bit of a forensic lens. So I opened up a full service firm in 2017, and we provided all manner of CPA services and still do. You know, whether it's bookkeeping, tax compliance, business valuations, CFO services, and whatnot.
Wow, very nice. So Kelly+Partner in Burbank is known for offering clear and timely accounting solutions. How do you and your team ensure that your clients' needs are met with proactive, forward-thinking strategies?
I think first in early 2024, beginning of 2024, I took my firm, Neumeister and Associates, and merged into the brand Kelly+Partners.
I see.
For
Okay.
clarity. Yeah, no
We'll
problem.
make a note of that.
In providing those kind of insights to clients, and I usually start with look at what's been done or hasn't been done in the years. And even if someone was working with the CPA, you know, a tax advisor, or other professionals in the industry, a lot of times things get missed, right? And it comes from working on so many forensic matters over the decades that, you know, fraud could perpetuate even if there was a bookkeeper, even if there were attorneys, a CFO, a controller, outside auditors, owners, investors, regulators, all of these hands and all of these eyes, and these things still happen all the time. And
unbelievable.
And one of the questions is, well, how could that be possible? If I'm doing all the things I should be doing, I have this month-end checklist, and I have my outside CPAs doing this, and I'm reconciling bank statements. How can I possibly be a victim? Part of it is understanding that whatever's being done is not necessarily always be enough. Something could change in regulations tomorrow. Something could change in technology tomorrow. Something could change in your business model or a new client base tomorrow that all of a sudden translates to a gap in whatever practices are being employed. So unless you look at how things are being done with a skeptical eye, that forensic accounting perspective of what am I missing? Why is what I'm doing deficient, right? Unless you have that lens on all the time, that comfort of thinking that everything's covered is often what translates into a fraud or something else happening.
Okay. So from your experience and your expertise, what are some of the most effective analytical solutions, or for that matter, investigative techniques that you use to solve complex client problems, whether that's related to tax strategies, internal control, or operational inefficiencies that can potentially help reduce these type of issues?
On the analytical side, I'd say before we even get to that point, is making sure there are basic books and records, right?
Okay.
Are there bookkeeping records? Great. Are things being maintained on a accrual basis, a cash basis, or some sort of creative new basis no one's ever heard of? And sometimes the third bucket is what I see most often.
Okay.
And then what are they doing to maintain the books and records or to verify it? Are there being month-end bank reconciliations? Very, very basic internal type of control, right? To make sure things match with outstanding outside bank records. And a lot of times there's the deficiencies or the issues are right there, just with the building blocks of a sound accounting system. Either the accounting system doesn't exist or it's the fundamental things that should be there aren't happening. Right? In the cases where they do have those things in place, then we can kind of go up maybe a notch in terms of analytic assessments, looking for patterns. So we'll do things like maybe cross-reference vendor list with employee records, look for same addresses or similar addresses, look at vendors of similar names. Another common scheme is somebody to set up a vendor name that's really, really similar to a legitimate vendor in their company. And if this individual has some degree of control in the accounts payable department or can sign off on things, I've seen instances where AP specialists or even controller will set up this fictitious vendor. They'll go out to the bank and create a bank account in this fictitious vendor name. And maybe the only difference is there's an S on the name. Let's say
I
the
see.
vendor's Johnson Smith Associate. And so they set up a company and it's Johnson Smith Associates S, right? So when the person signing checks starts flipping through like, oh, that sounds fine, that sounds fine. Or sometimes they'll just blindly stamp them too. Yeah, they don't think anything of it because they're familiar with their vendor name. They don't catch that there's maybe like one letter difference. And then there's another
Wow.
AP person, essentially just pilfering the company buckets, right? With no one the wiser.
Unbelievable. Thank you for sharing that. You've worked across a wide range of industries, from retail to pharmaceutical to transportation to IT companies. What financial challenges do you see typically, or do you see businesses commonly face across different sectors, and how do you address them?
As disparate industries might seem on the surface, oh, well, how is a construction company at all like a e-commerce business or something else? Yeah, when it comes down to accounting, it's all the same because accounting is the language of business. It's industry agnostic, right? Yes, there could be certain terms of phrase that are unique to a certain industry. Yes, there might be some nuances in terms of gap compliance with certain things, but otherwise it's fundamentally the same stuff.
Okay.
Outside of that, I'd say area there may be kind of a bigger difference is businesses that deal with services versus ones that deal with tangible goods, right? Services, then you don't have to deal with inventory methodologies, release of cost of goods sold and everything else, and all the things that go along with that, right? With dealing with tangible goods and accounting for a tangible good, warehousing it, physical counts and whatnot. I'd say that's probably one of the biggest differences. If I did kind of stratify industries into different buckets, it'd almost be like services is on one side and then companies that sell tangible goods is in another. But otherwise, underneath those respective umbrellas, a lot of similarities.
Okay. So, being that there's this platform of commonality, regardless of the industries, what are some of the most effective analytical solutions or investigative techniques that you use to solve complex client problems, whether they are related to tax strategies or internal controls or operational inefficiencies? Can you enlighten us with some of the solutions that you utilize?
Yes. Yeah. So if it's after, let's say it's after the fact, like something has already been discovered, that usually makes it a little bit easier as to like where to focus efforts, right? And again, most of the time when we're called into a forensic project, it's usually after the fact. The
Okay.
lawsuits have been filed or there's already known embezzlement. They may not know the full extent of it, but it's aware, right? So that will usually kind of help define scope. And in those cases, The procedures are going to be really kind of dictated by what that scope is. It might just be one account that we're looking at, or a few certain types of expenditures, right? And so the specific things we might do will be dictated by what those accounts are or those account types are. In contrast, where a business doesn't know if anything is of concern, and like, you know what, we're looking for kind of a forensic sniff, not a financial audit, right? They appreciate
Sniffer,
they appreciate the
financial sniffer.
financial sniffer. They're just looking for a little bit more comfort that everything's good. Something that a financial audit won't necessarily identify. The whole point of an external financial audit is to make sure that the financials are fairly presenting and conforming with GAAP or some other accounting basis. It's not there to check every dollar. It's not there to make sure there's no fraud. Now, those are sometimes byproducts of some of the procedures, but that's not what they're designed to do. And I think that's one of the other biggest misnomers about perceived protection, about the validity of books, if there's external financial auditors. Again, not discounting the value that can provide. It's great internal control, but it's not an end all be all.
I see. So you provide a litigation advisory service for clients in various industries. How can forensic accounting help businesses avoid or better prepare for litigation in the first place? And if it does come, how do you take that and whether to go after the organization or defend it?
Forensic accounting can help in providing just that perspective that's not necessarily going to be there with most of those other parties. Again, the outside CPA that's handling tax returns is not necessarily there looking from a litigation or pre-litigation perspective, looking for those kind of risks. And part of the reason for that, I find, is most professionals in the accounting space that provide vanilla accounting services are looking at books and records, tax returns, financial statements, looking at numbers, right? In forensic accounting, that's only part of the equation. The other big part is people, personalities, intents, motivations, living standards, things that you're not going to see in the books and records, right? So as great as it is to get, copies of general ledgers and bank statements and all that, sometimes just sitting and interviewing, sort of interrogating certain parties in an organization can be a lot more telling than the books and records by themselves in a vacuum. And a lot of times those meetings, those interviews can tell us more about where to look and how to look for things than if we just started looking at a bunch of numbers.
You almost sound like an IRS agent, an auditor, IRS auditor. Okay, let's move on to a different type of conversation here. Business valuation. All business owners care about the business valuation. And of course, it's a very critical part of many of your engagements. What should entrepreneurs and business owners know about business valuation, particularly when it comes to litigation or even selling their business?
Sure. Yeah. I think the first thing is to understand how the business is being valued. Right? One of the reasons why, especially in litigation or even divorce and other contentious matters, why two parties could have night and day versions of a business valuation is because they're looking at it from a very different angle. Right? So there's things that we call standard of value. Fair market value, which a lot of people are familiar with the term, can be very different than strategic value. Right? And I'll use those two as an example. Let's say you have a collection agency. They essentially buy debts, right? And then they service those debts and they're able to kind of keep what they collect. Kind of a straightforward business on the surface. Let's say that they're grossing a couple million per year and netting $500,000, right? 25% return. In terms of a fair market value, without actually going through the exercise, that number is going to assume that there's a hypothetical seller, a hypothetical buyer, both of which are neither compelled to engage in any sort of transaction. They're both fully aware of the books and records, and the books and records are reliable. So that valuation on that business is going to be reasonable from that perspective. In contrast, a strategic value for the same collection agency business could be dramatically more, right? And one of the reasons why is because you're not looking at a hypothetical buyer. A strategic buyer might be looking at a business, not just what its current reporting, but understanding maybe several expenses or most of the expenses might go away underneath their umbrella because they already have those expenses covered. So they're not going to incur any more of it. So therefore, the value to them can be a lot higher. So how often happens, and again, kind of divorce and other litigation matters involving evaluation, is one party might be looking at just kind of a reasonable value, if they went to market, what they could reasonably expect. And the other party might be looking at, a very specific buyer or a very specific type of transaction that could yield a much, much higher number. And that's where we'll get, one valuation that's $1 million and another valuation that's, $4 million. And then they fight about the difference.
Understand. Obviously, buyers and sellers have very different lenses when it comes to your market value, of course.
Very much.
You often focus on improving operational efficiencies and internal controls. What's one small change or habit that business owners can implement by hearing or listening and watching this podcast that can improve their financial performance? Any thoughts on that?
Yes. And rather than point to a certain type of internal control, like a month-end checklist, I would say really just asking the question, pushing back. Just because the external auditor said, oh, everything looks great, doesn't mean it's great. What did they miss? Just because your controller reconciles the bank statements every month, says, oh, yeah, everything's reconciled through last month. What are they missing, right? Asking the question, what is being missed, right? Pushing back, looking at numbers a little bit. A lot of times, small business owners, let's say the majority of our clients, in the small business arena, don't really understand books and records, and most of them don't even look in their financials.
Wow. Surprise.
Most small business owners, I find, usually kind of operate at the bank account. They look at the bank account. Oh, there's money there. We're good. Right.
Be able to make payroll, pay your electric bills, whatever.
Exactly. They know things are getting paid. They're able to live their life. They're like, oh, no, everything must be good. Right.
Wow.
And then the CPA is filing the return or minimizing taxes. So everything's good. Right.
So you've led your firm through years of growth. How would you describe your leadership philosophy, and how does it help you build such a strong long-term relationship with the clients that you serve?
In terms of leadership philosophy, I definitely practice what I preach. I will never be the type of boss or leader that goes and plays golf multiple days a week. I don't even play golf at all. I worked in those kind of environments. I remember working at one firm, and a couple of the partners were literally just playing golf 2 or 3 days a week, like every single week, right? Like living a very different lifestyle. I do acknowledge there's some business development components of what they're doing and stuff, but the optics were that they did little to no work. And I always had an issue with being asked to do all the work, and the people that are doing the asking are doing none of the work. So I was like, no, I will never be that way. I will always be the person that's probably first on the phone with a client, or the one that's taking client calls 11 o'clock on a Saturday night. Again, not advocating a lack of some sort of balance for my teams, but I will definitely set the standard as to going above and beyond for our clients.
Fantastic. Kelly and Partner Burbank emphasizes client trust and freedom in your mission statement. How does your firm balance technical expertise with maintaining personal connection with clients? And is personal connection even an issue, or I should say, even factored into the clients that you serve?
Yeah, no, I think it's very much relationship driven. Right? Our clients are not just a client ID and an amount that we bill every month or every year or whatever. right? They're individuals that we know, that we talk to. Virtually every single client I work with has my direct cell. They know that they can call, they can text within reason. Yeah, and 99% absolutely respect that or take advantage of that in a meaningful degree. We'll reach out once a year or a couple times a year with a question. There's those very few that decide it means it's a free range to call and ask for advice all the time. And we'll have a separate discussion about that. But it's important for me, and I think for the culture we have of our clients, that they know that we are a resource, right? This is
Sure.
not just a transactional relationship.
Okay.
Just as we grow with them, they grow with us.
So you're building long-term connections, long-term relationships.
Yes.
What's next for you and Kelly+Partners? Any exciting projects or changes on the horizon?
Just continuing what we have been doing and what we've been building and continuing to scale from there. Adding some additional services, other ways we can help our client base and continue to be that go-to trusted advisor for them on all matters. And if it's something that we can't directly help out with, the chances are we have a resource or affiliate we could connect with them to and can vouch for.
Okay. If a business owner that's listening to this or watching this is unsure whether they need forensic accounting services or a financial advisory consultant, what's the first step they should take?
Call.
Okay.
I'm happy to give pretty much everyone, 5-10 minutes off the clock time just to soundboard ideas, hear their concerns in their business, right? Are they having difficulties scaling? Are they having difficulties with turnover? Are they not seeing a way out in terms of an exit, whether it's in 2 years or 20 years?
Wow.
Being
Great.
happy to just have those conversations with them.
Fantastic. What's the best way to get a hold of you or specifically contact you?
Specifically, either email address, it's
Okay.
jeff.neumeister@kellypartners.com, or on my direct mobile number, 818-518-0190.
Okay. And for those viewers, it will be at the bottom of your screen, the email address for Jeff, as well as his cell phone number, which we don't have too many. So if you are watching, it's on the bottom. And for those of you that are listening, it will be in the show notes. And final question, Jeff, if a business owner is looking to connect with your firm and to learn more about the services that your firm can provide for them, what's a good website for them?
www.kellypartners.com.
Fantastic. Any final words or comments?
I would just say to remind all the business owners out there, future business owners out there as well, to be skeptical, ask questions, right? And reach out to resources like myself anytime.
Wow, that's fantastic. Well, that concludes today's episode of Jet Setting Wealth Advisory Podcast. I want to thank Jeff Neumeister for joining us and sharing his insights on the power of forensic accounting and financial strategies in today's ever-changing business landscape. It's always fascinating to hear how data, diligence, and expert analysis can uncover opportunities and protect against financial risks. If you enjoyed this podcast and this episode, please be sure to subscribe, share it with your network, and leave a review. And to learn more about DTY Wealth Planning Solutions and how we can help you with tax mitigation strategies, especially for airline pilots and aviation business professionals, please visit us at dtywealthplanningsolutions.com. I'm David Yu, active airline pilot, financial advisor, and podcast host. Thank you for listening to us. We'll see you on the next journey. Goodbye.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T. Yu, don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly